Imagine trying to run a global business today. I mean, you're selling everywhere online, physical stores, dozens of countries, countless payment methods.
Yeah,
Then you're battling fraud, managing settlements, trying to grow. It's just an absolutely mind-boggling headache for big businesses.
it really is complex.
So today, we're doing a deep dive into a company that aims to simplify exactly that, Adyen. They're a global financial technology platform started back in 2006 in Amsterdam.
Right. And they've really evolved, haven't they? From just a payment processor to something much broader.
Exactly, a comprehensive financial tech provider. So our mission here is to really unpack Adyen's unique approach. We'll explore their products, understand their core strategies,
hmm
and see how they're not just handling transactions, but actively helping businesses, as they say, realize their ambitions faster.
That's the goal.
Yeah, you're going to walk away with a really clear understanding of why a company like Adyen is, well, frankly, crucial in today's global economy.
And to guide us, we've looked at a pretty comprehensive company profile on Adyen's products and strategies, plus, several other key industry reports and analyses. We'll try to connect the dots for you.
Great. So let's start at the beginning. How did Adyen get started? What's the origin story, the big idea?
Well, it was founded, as you said, Amsterdam 2006,
Yeah.
Peter van der Does and Arnout Schuyf. What's kind of interesting is how quickly they hit profitability by 2011.
Wow, that's pretty fast.
Yeah. And then in 2022, they really nailed down their core mission, calling it Engineered for Ambition. And, it sounds like a slogan, but it genuinely seems to reflect their whole philosophy,
Which is?
which is building their platform entirely in-house, from the ground up. It's designed for those big global businesses, giving them end-to-end payments, data, financial products, the whole package.
And built on certain values, I imagine.
Oh, yeah, absolutely. Things like benefiting all customers, thinking long-term, iterating quickly, collaboration, transparency, and, importantly, ethical and sustainable growth. That foundation seems key.
Okay, let's dig into that core differentiator you mentioned. Building it all in-house. Adyen didn't just buy up companies and stitch them together. Why is that such a big deal? What's the game changer there?
Right. That is the defining strategic choice. Building everything, including getting their own banking licenses, direct connections to Visa, MasterCard, etc., it gives them, well, unparalleled control.
Control over the whole process.
The entire payment life cycle. Think about it. Fewer middlemen means faster payments.
Yeah,
Fewer points where things can break down.
makes sense.
They can be more proactive on regulations and offer much deeper customization for their clients. Now, they admit it's more expensive in the short term to build instead of buy or partner.
Sure, that takes serious investment upfront.
Absolutely. But they argue it leads to better unit economics down the line and keeps them differentiated. By owning the whole tech stack, they basically operate more efficiently at scale, keep more of the transaction value, and innovate faster than competitors using patchwork systems from acquisitions. It's a big long-term bet, really. Drives better margins, stronger client relationships.
Okay, that makes perfect sense. And a huge part of that control you mentioned is their direct acquiring and banking licenses. Can you break that down? What does that actually mean for businesses using them?
Yeah, definitely. So Adyen holds banking licenses in the EU, the UK, and the US. Plus, they're a principal member and licensed acquirer for Visa and MasterCard.
Okay.
So what this means for you, if you're the merchant, is direct control. No bouncing between a gateway, a processor, an acquirer. Adyen can often be all three.
And the benefit is?
Tangible benefits. Faster settlements, getting your money quicker. Fewer intermediaries, so fewer points of failure. Better liquidity. And just a more consistent experience overall.
Got an example?
Yeah, get this. Flixbus, the big global bus company. They reported a 21% reduction in U.S. bank declines just by using Adyen's local acquiring in the U.S.
21%, that's huge.
It's massive. That's lost sales they're getting back. It really shows who Adyen is built for.
Which is primarily those large global companies, right? The household names?
Exactly. Uber, eBay, LinkedIn, Facebook, Netflix, Etsy, Spotify, H&M, Microsoft. Those kinds of players.
And the eBay example is pretty telling, isn't it? Moving from PayPal.
Oh, absolutely. That shift, starting around 2018 and mostly done by 2021, was a huge validation. It showed Adyen could handle immense volume and complexity. These big companies, you see, they often struggle with fragmented legacy systems.
Right, the old stuff cobbled together.
Exactly. Leads to payment friction, lost sales at checkout, and massive headaches managing fraud globally. Adyen's integrated platform is designed to solve exactly those kinds of enterprise-level problems.
So their core offering is really a one-stop shop for payments.
That's the idea. A single integrated platform, e-commerce, mobile, in-person point of sale, or POS, across different countries, different payment methods. It covers the whole value chain, gateway, processing, acquiring, risk, settlement, everything.
Okay, let's talk online payments first. You mentioned maximizing conversion, reducing abandonment. How do they do that specifically?
Well, a big part is just the sheer breadth of payment methods. Over 100 global and local options.
Like,
All the major cards, obviously Visa, MasterCard, Amex, digital wallets, Apple Pay, Google Pay, PayPal, WeChat Pay, Alipay. Buy now, pay later is huge now, so Klarna, Afterpay, Affirm. Plus various bank transfers imported in specific regions.
and how easy is it for a business to integrate this?
They offer flexibility there too. Drop-in is like an out-of-the-box checkout. Components lets you customize parts of it, and API only is for a totally custom build.
Got it.
Plus, things like language localization, showing relevant payment options based on location, and tokenization for repeat by turning card details into a secure token.
Right, so you don't store the actual card number, safer, easier next time.
Exactly. All designed to make checkout smooth and secure.
But they didn't just stick to online. They moved into in-person payments, too. POS services since 2012, Terminal API in 2018.
Correct. And again, flexibility is key. They offer tap-to-pay on compatible devices, mobile terminals, standard countertop ones, even unattended terminals for kiosks.
Any examples of how that helps in-store?
Yeah, Majuri, the Canadian fine jewelry brand,
Yeah.
they saw a 50% cut in checkout times using Adyen's mobile terminals, basically. Sales staff have them attach their smartphones, process payments anywhere.
50% faster checkout. That's a big deal for customer experience.
Huge. And the system's resilient, too. It can still take payments even if the store's internet connection temporarily drops, which, as you can imagine, is a lifesaver.
Okay, now here's where it gets, I think, really interesting for modern retail. Adyen talks about unified commerce. What exactly is that? It sounds like more than just omnichannel.
It absolutely is a leap beyond omnichannel. You see, omnichannel was mostly about just having multiple channels. Unified commerce is about connecting the data from all those channels online, offline, mobile into one single system.
Ah, breaking down the silos.
Exactly. No more separate buckets for online sales data and in-store sales data. It enables those really fluid customer journeys we expect now, like ordering in the app and picking up in-store, buying online, returning in-store, self-scanning items in the aisle and paying on your phone, buying something in the store but having it shipped home. All seamless.
And the benefit for the merchant. Beyond a happy customer.
Huge benefits. You get actionable insights from that consolidated data. Reconciliation across channels becomes way simpler. You can build loyalty programs that recognize customers wherever they shop.
Okay, that makes sense.
And crucially, this is really key, that unified data feeds directly into Adyen's machine learning for fraud prevention, their RevenueProtect system,
Right.
and also for revenue optimization, which they call Uplift.
Yeah.
So it's directly boosting the merchant's bottom line by stopping fraud and increasing successful sales.
So it's not just payments, it's about using that payment data intelligently.
Precisely. Which leads us beyond basic payments into their integrated financial products, like Adyen Issuing, launched in 2019. That sounds like a pretty big deal.
Issuing, like creating cards.
Exactly. Adyen Issuing lets businesses create and manage their own branded physical or virtual card programs at scale, all through an API.
Wow.
And because Adyen has the banking licenses and acquiring infrastructure underneath, they can integrate it seamlessly. They can instantly fund these card programs. It essentially lets almost any business become a card issuer in a way.
Okay, my mind is racing with possibilities. What are the key use cases here?
Yeah, it opens up a lot. Think about embedded finance, a platform, say a marketplace or a gig economy app, offering branded cards directly to its users. So users get instant access to their earnings on that card.
Ah, like instant payouts for drivers or sellers?
Exactly. Then there's supplier payments, businesses instantly sending funds to partners using single-use or multi-use virtual cards, great for cash flow. And expense management, streamlining corporate spending with virtual or physical cards, with really granular controls and real-time tracking and reconciliation.
Plus, I read something about new revenue streams.
Yes. Clients can get a share of the interchange fee, that small fee charged whenever a card is used. So it can actually generate revenue for the business issuing the card.
That's pretty powerful. Okay, and then there's Adyen for Platforms, launched earlier in 2016, tailor-made for marketplaces, you said.
Yeah, think eBay, Etsy, those kinds of multi-sided businesses.
Mm-hmm.
Managing payments on a platform with buyers, sellers, commissions, payouts, it gets complicated fast.
I bet.
Adyen for Platforms provides a compliant global framework to handle all those complex flows. And this is where Adyen really increases its wallet share with merchants.
Meaning they become more embedded.
Exactly. They
Eh.
create these really sticky, high-value relationships. They become part of the client's core financial operations, not just a payment button. It also lets platforms offer embedded financial services, like providing working capital loans directly to their sellers on the platform.
Okay, so these integrated products are clearly powerful, but what about the sort of secret sauce stuff? Risk management, data insights?
Right, the value adds built on top. Their main risk product is RevenueProtect. It's not just simple rules. It combines customizable rules with advanced machine learning and even selective manual reviews for tricky cases
Using data from?
their huge global network. Cross-industry data helps them spot patterns using behavioral analytics like, spotting if the same email address is suddenly making lots of purchases across different merchants.
Smart. And secure, presumably.
Oh yeah, top-level PCI DSS compliance, that's the payment card industry security standard. Encryption, 3D Secure 2 for extra online security, tokenization. The goal is always protecting revenue without blocking legitimate customers. It's a balancing act.
And for making sense of all this data, they have the customer area insights.
Yes, the customer area is basically the central dashboard. Manage payments, see real-time data across all channels, online, offline, get insights into how different channels are performing, customer payment behavior, revenue.
So, the control center.
Pretty much. Plus all the reports you need for reconciliation, managing chargebacks, understanding cash flow. It's the nerve center for the merchant's payment operations.
Okay, so the customer area gives you the insights. But what about actively boosting revenue? That's where Adyen Uplift comes in.
Exactly. Uplift is specifically designed to squeeze more revenue out of the existing transaction flow. It uses data and machine learning to increase authorization rates, getting more payments approved, and conversion rates.
How? What does it actually do?
Several things. Smart payment messaging sends extra data to the banks to help them approve legitimate transactions. AI-powered auto-retry attempts, failed payments, again, maybe slightly differently. Sharing risk data strategically with issuers can also help.
And routing payments smartly.
Yes, intelligent payment routing and least cost routing. Basically, for each transaction, figuring out the path most likely to succeed and the most cost-effective path. The AI models behind this are constantly learning, using data from literally trillions of dollars in global payments.
That's a serious data advantage. Okay, shifting gears slightly to their strategic playbook. Global expansion is obviously huge for Adyen. How's that looked?
Relentless is probably the word. They support, over 100 payment methods in nearly 100 markets now? Europe's still the biggest chunk of revenue, 56%.
But growing elsewhere?
Definitely. North America's key, about 25% now, and APAC, around 11%. They've made a massive and costly investment in the U.S., especially hiring, marketing.
Right. You mentioned that impacts short-term profits.
It does, but it's strategic. Because it's not just about being present, it's about getting those local licenses, those direct connections we talked about. That's what gives you the higher authorization rates and lower fees in that specific market. You have to be local, essentially.
And they keep innovating on the product side, too, product-led growth.
Constantly. Continuous in-house R&D. They focus on emerging trends, embedded payments, real-time payments, digital wallets. They often introduce new tech, like tap to pay, even before it's widely available. They want to be ahead.
So given this focus on building in-house, it's interesting they still have a big partner program. That seems slightly counterintuitive.
Well, what's fascinating there is how they approach it. They control the core tech, absolutely. But the partner program recently enhanced, July 2025, over 1,000 partners now lets them scale way faster.
Scale market reach.
Market reach and solution delivery. It goes beyond what their direct sales team could do alone.
Yeah.
It's pragmatic. They have two tracks. Tech partners whose software complements Adyen, and service partners who do consulting and implementation.
Accelerates adoption, basically.
Exactly.
And they form specific strategic alliances, too.
Yes. Besides the broad program, the expanded PayPal partnership, announced August 2024 to offer PayPal's fast lane checkout, is a big one. Plus crucial integrations with platforms like Adobe, Salesforce, SAP, making sure Adyen works smoothly within their clients' existing systems.
Okay, let's pull this all together then. In a super competitive market, Visa, MasterCard, PayPal, Stripe, countless others, what are Adyen's real, sustainable, competitive advantages? What makes them stand out?
Stepping back, I think it boils down to a few key things that are hard to copy. First, that unified, in-house built platform. It just provides better data, simpler integration compared to competitors who grew by acquisition.
Right, the unified core.
Second, the direct acquiring and banking licenses. Cutting out middlemen means better performance, lower costs for merchants. It's a structural advantage. Third, their focus on large enterprises. The platform is built for scale and complexity, and their interchange plus pricing is often more appealing to huge merchants than flat rates.
More transparent and potentially cheaper at volume.
Exactly. Fourth, global reach with single integration. That's massive for multinationals. Simplify global ops.
Makes sense.
Fifth, the expanding product suite issuing accounts capital. That makes them incredibly sticky and increases their value way beyond just payment.
Embedded deeper.
Totally. Sixth, the advanced AML for fraud with RevenueProtect and optimization with Uplift. That data advantage is hard to match. And finally, just their consistent innovation pipeline and strong financial health, which lets them keep investing heavily to stay ahead.
Wow. Okay. So we've covered a massive amount today. We've really seen how Adyen carved out its leadership spot, that unique, in-house, unified platform, the direct acquiring, the banking licenses, the focus on client growth. It all ties together.
It really does form a coherent strategy. And looking ahead, you can see the growth vectors. Continued global expansion, especially North America, really pushing those embedded finance solutions like issuing and capital.
Or stickiness.
Exactly. Leveraging their AI even further.
Yeah.
And that enhanced partner program should really act as a force multiplier for their growth.
But it's not all smooth sailing, right? The fintech space is brutal.
Oh, absolutely. Intense competition, price wars are always a risk. And that build-it-yourself approach, while a strength, is expensive. It puts pressure on short-term profits like we saw with the U.S. expansion.
Plus macroeconomic factors, execution risks.
Always risks. Rapid expansion is hard to execute perfectly. They need to manage those carefully.
So wrapping up, Adyen's story really underscores the value of, well, deep vertical integration, owning your core systems. Even if it costs more upfront, the long-term differentiation and control can be immense.
It's a powerful case study in strategic patience, maybe. Which leads to a final thought for you, the listener. In your own field, whatever that might be, where could a similar build versus buy approach to core capabilities unlock significant long-term advantages? What core systems could you potentially control more directly to gain similar efficiencies, insights, and maybe transform how you operate? Something to mull over.